Hi everyone, Scott from Edge Lending Solutions. Hope you're all well. Coming to you from beautiful Brisbane River, Kangaroo Point, here in Australia. Look, I spoke the other week in relation to some of the boutique lending products that we're starting to see hit the market, and specifically targeted for mortgage prisoners. So if this is you, look, this makes sense to, or if you know someone who is in the same situation, please have a quick listen to this. So the premise of it is, being a mortgage prisoner, is that let's say you're paying, 6% on your home loan, and you want to get a better rate. You've tried to negotiate with the lender, they're just sticking steadfast, they're not going to move. Okay, and so then you try and go to a new lender who's got a lower rate, and you look at their calculator and you go, hey look, oh that's awesome. They're offering 5.5%, and I'm just going to try and refinance, I'm going to save myself 0.5% on my loan, maybe that's $500 a month, that's amazing. I can't, this is so good for me, I really need to do this. You go to the new lender and they go, yep, that's our rate, 5.5%. On our calculator, you need to see if you can afford 8.5%. The regulator is making us put 3% on the actual rate that you're really going to borrow the money at, to see if you can handle, oh my God, 12 rate rises. 12 rate rises is pretty crazy, and this is part of the problem in the industry. But this is where it is, okay? And guess what? You can't qualify for the lower repayment. But you go to the lender and say, look, but I'm already paying 6%, and I want to have a cheaper lender at 5.5%. That does not make sense. I'm making these repayments on time. I can do this. I've proven that I can do it. And the lender goes, so sorry, this is the regulation that we're under. We can't help. There's a couple of lenders who have taken that on face value and that have approval from the regulator to bring these products to market that actually will service at the rate they're going to lend you the money at. So let's talk about that again. Actually service on the calculator at 5.5%. They're not going to load it up at 8.5%. Now, what's really the criteria here? The criteria is not as much about your income. So this is very, very different. This is about your history. Your history. So if you've been paying this 6% the last 12 months and you haven't missed any payments, so that's one. Number two, you've been in your job for 6 months, or you've been self-employed for more than 2 years. So that's two. Three, you've got a clean credit file. If you can fit those three criteria, then in reality, it's not based around your income as much as is, hey, I've been making these higher repayments, please give me the lower repayment. We're starting to get a lot of traction here. We've come to you before and said, look, we need to go and renegotiate with the lenders and try and get our rates down. Sometimes that does fail, and lenders have decided that they're not going to give away part of their profit to you. They just don't want to budge. And then now we have another solution that isn't as based around being able to pass a new updated servicing calculator. So we're really excited by this. We know we can help a lot of our clients out, try and keep that cash flow that's leaving the household to a minimum, especially to the mortgage repayments. And mortgage repayments, and basically in the kitchen, in the household, that's about the only places we can really save money. Everything else seems to be a fixed cost at the moment. So it's very, very, very important. If this is you, please contact us. We think we do have potential solutions. Anyway guys, that's enough from me. Signing off. Remember, life is a family sport. Wheels and Edge. See ya.